day traders. One of the most common questions that I get right now is what type of approach is working in this market, in this environment where we have the debt ceiling concerns and we're getting down to that X date when we have probably the most hawkish looking target rate probability that we have seen in weeks, if not months. And we're going into the summer doldrums. And then there's a lot of confusion as far as whether or not the Fed is going to hike one or two more times. When this date, what is the date for this whole debt ceiling spectacle to be through? So there's a lot we're dealing with. When there's a lot of concern, shorten the time frame. What you see in front of you is the running week, and I have to add in, I think we have the 26th in here too. This is the week of alerts in the Sector Secrets Mastery and Futures Room. So what trades did we alert out to members? These are only trades that members were alerted to, right? So if the alert went out in terms of a day trade, that's what's represented here. And I love that because I love that we're trading in a community. I love that we have that transparency. And if I see it, that's what I'm sharing. So these are not trades that were happening off in a corner. These are trades that were public to the group. And that's the point of it all, right? To share the trades, to support each other during a fairly difficult week. Well, it wasn't a difficult week. So my question is, really, what do we need to do to make sure your week can look like this, right? Did your week look like this? And if it didn't, I'm hoping to give you some tips to make sure that next week, a shortened week, can be a step in the right direction. All right, so a couple things to look at here. I do my breakdowns ideally, and by the way, this is the TradesViz platform. I like this. I've used a lot of different trade software, trading journal type software. I'm really liking TradesViz, TradesViz. I don't know the folks there. If you're listening, TradesViz, call me. I love your software. I've been using it for about 10, 12 months now. And I'm going to break everything down every week. So number one, why break things down week by week? Because I need to know week by week whether or not what I'm doing is working. I think this environment is entirely too volatile to step back and look at things month to month. I think we need to stay week to week. Day to day is too frequent. Every week we'll take an assessment, and that's something I'm hoping to do here with you all on Fridays. Okay, so this is the P&L and everything for the week, and these are futures, right? I'm doing the futures video. These are futures. But I do want to mention, if you are not a futures trader, and I know a lot of you in the Sector Secrets Mastery know, but Rog, we traded a bunch of options as well. Absolutely. When you take a look at the alerts that I send out to members, a lot of times we're trading stock options, ETF options, but we'll also trade, as you can see here, we'll also trade options on the ETF alternative to the futures contract. So if you're listening and you're not yet a futures trader, you're thinking about it, I'm not here to tell you not to trade futures, but I'm telling you that you don't have to trade futures, mini or micros. Everything I'm sharing with you can be executed using simply long calls and long puts in the QQQ. And I think that's a better risk managed way to trade sometimes an extremely volatile asset class, which is futures. I think a great baby step into futures is using the ETF option of the QQQ, the SPY, the DIA, TLT, GLD, and onward, right? I think those options are great ways to control risk because you can spend less money, they're less leveraged, and I think it's a great way to start. Obviously, all trading involves risk, but this is one way to control risk. So you'll see everything I'm talking about usually has this alternative. All right, so back to our breakdown. The common question that I get a lot of times is, what's the size of the account? This particular account, as you can see here, the deposit was 17.5. All right. And then this is, of course, the week of May 22. It's a good week. I'm not in any way saying that the alerts that we had this week were typical, because we had some very good follow through on Tuesday. We had some very good follow through on Wednesday. So some of these outsized moves in the S&P and the NASDAQ futures, Again, remember the leverage. Yes, SPY puts and QQQ puts worked great as well, but they're going to be larger. And I want to show you the losses because I had a loss today. This was actually a TLT ZB trade we sent out. I took the ZB futures and look, there's losses as well. So remember, as much as you might be saying, hey, Rog, that's I'd love to have a week like this. Remember, these are the possible losses as well. So keep a very balanced look. Again, look at the size of the account. And as the week went on, obviously it wasn't at 17.5 for very long. So it allowed me to trade more contracts. All right. So again, these are a reflection of alerts we had in the Sector Secrets Mastery as well as the Futures Room. All right. Let's talk about what's working. And hopefully, if you did not have a week like this, let's get you on the right track. Okay, and this might be a slightly longer video because I've got a lot of folks that are coming to me saying, Rog, this was a tough week. And I agree. What makes it tough is the uncertainty. So we kind of started off with the first fix. Shorten the time frame. And you'll notice what's on my screen right now is a 1 hour chart and a 5-minute chart. The day trading is great on the 5-minute. The 1 hour is great for short-term swings with a duration of 1 to 3 days. Okay, I'll get into more detail as far as what I'm looking at next week in the premium video. Those of you that are futures members, or if you're members of my This Week in the Markets report, you will get that breakdown later on today, Friday, and you can see what I'm setting up for next week. All right, a couple things. Number one, if I'm going to do my day trading, I think the first thing to think about is when are we entering our trades? Everything I showed you there were futures day trades entered between 9:30 and 10:35. All right, so that's the window. And notice it's a very small window. So one of the first corrections I would say if you're trading all day long, don't. Find this hour and 5 minutes to focus on. The other thing to think about in terms of every morning and setting yourself up for success, what's worked right now is not coming back in the afternoon. I think there have been some pretty decent afternoon setups, but really focusing on that first hour of the day, that's all those trades were. The other thing is making sure we're not trying to pick tops in uptrends or pick bottoms in downtrends, right? The ES moved higher all day. Two of the bigger trades this week were downtrending setups, were shorts in overall moves lower, right? So what we did is we looked for resistance, say in the NASDAQ, we looked for resistance in the S&P and took the ride lower. The way we can do this is to trust what we see. Trade the market we have, not the one we wish we had. When I see this multi-trend in red, that tells me let's focus on the path of least resistance to the downside, and that means entering at zones of resistance. This was one of our entry windows for our shorts, right along this dashed line of resistance. So those are things we focus on. So far, two things hopefully will help move the needle. One is don't hesitate to use QQQs, puts, in lieu of the NQ futures. Two, be patient. Every one of our trades were just one directional trade taken in that symbol. One ES or SPY, ES short or SPY put. One NQ short or QQQ. Not in and out, not scalping. This is not a scalping style. I don't recommend that actually. Find the path of least resistance. If it's down, focus on a resistance level. That's where you dig your heels in. That's where you build a position, so to speak, right? That's where you can manage risk from as well. So I hope that makes sense. All right, moving on then to what if we're wrong, right? You see, I got the loser there too this week. What if we're wrong? Well, the place I was wrong was the bonds today. How could I have avoided and or managed risk better, right? So if I take a look at the economic calendar for today, I'll see that we had this 10 a.m. hot zone, the revised University of Michigan Consumer Sentiment. Part of the reason I got stopped out is I had an open trade going into a hot zone. One way I could have reduced risk or not had the loss at all is to respect that level as something too volatile to deal with. Now, I chose to do this. I've got a pretty good size account. I've been doing this for a lot of years, but that would have been one way to minimize the risk. avoid the hot zone, the scheduled high impact event. So that's one way to avoid this. The whole point of this video is to say, hey, what worked and what could I have done better, right? Okay, the next part of it, and I think the part of it that I did the most right today, was I kept a really tight stop. And when I was wrong, I just accepted it, right? When I exceeded, and wrong is such a funny word. When I exceeded the allowable amount of risk, I just got out. That's all there is to it. Now, what's really funny, and this is where sometimes we just have to laugh and shrug it off. We've had a great week in the Mastery and in the Futures Room. I took, in the context of a downtrend, right? You can see the downtrend here. I took what really was kind of an aggressive short, right? And you can see it's overall moving lower. I kind of took an aggressive short. The funny thing is, if you take a peek, we went right into resistance and moved lower. But what did I not do? Right? I took a loss when I could, not when I had to. I didn't average down. I didn't defend. I didn't do all these euphemisms for not accepting the loss. I did not cruise down the river of denial, right? I just took my loss. As I like to tell my members, take a small loss, right? Take a paper cut. And then that way we can just move on and look for other opportunities. So that was a loss today, but I wanted to show you what I could have done to avoid it, and frankly, what I could have done to maybe trade it even better. Rely on the historical volatility levels, rely on the resistance of the propulsion, and wait for that really nice downtrend to reorganize later on in the morning, right? And that's the process. We always have to find ways to trade better and self-correct and choose better trades. I hope this was helpful. If you have any questions, feel free to leave questions, comments, whatnot below. And remember, futures, options on futures, options on the ETF alternatives are all valid. I know this is a longer video, but I think it was a really important one, because when we have weeks like this and we do really, really well, success leaves clues, right? I've always been told that. And this is what we found worked and is continuing to work. Shorten the time frame. As long as the debt ceiling spectacle is upon us, we still have to deal with what the Federal Reserve is going to do in the June meeting. So shorten the time frame, stay more nimble, and everyone have a wonderful long weekend. Happy Memorial Day. Spend it with family and friends, and very grateful for our community here. Very grateful for your time. I'll see you next week. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.